What up, traders? What up, investors? Ken here from the Dyslexic Investor, and we're going to be currently looking at GameStop Stock. This is going to be the ticker symbol GME. This individual here within the Wall Street Bets form posted with Lawrence 1997 is basically putting a 20,000 or 20K YOLO play into play for October 16th this year. He's doing the 8 calls, again putting down nearly $20,000, buying 620 of those contracts at the $8 strike price. We're going to be analyzing the probability and looking at the charts as well. But I kind of wanted to give a better look at the business. And GameStop has had a couple rough years, but that being said, there's actually some surprising stuff that they are kind of picking up, even due to the various lockdown stuff. A lot of their online sales we're still up 90% of what they normally would have seen, and even some of the stores going curbside during the pandemic were still making pretty reasonable margins and making a pretty consistent reoccurring revenue. A lot of the GameStop stores that are underperforming, the company's actually closing down and being very strategic on what they're doing with so forth. They're trying to kind of change the GameStop environment once we're kind of past the COVID-19 outbreak, and potentially going to be adding in like not a LAN party, but more like tabletop games, potentially adding in more collectible merch from video games. And they're also saying, some of the analysts, via Zach's analyst, saying that potentially people might be holding off some purchases due to the next-gen consoles coming out the later part of 2020 and 2021. So that's the new Xbox, that's the new PlayStation, with them coming out. And then on top of, a lot of software now is just directly through the internet, so you don't have to really leave to buy games and so forth. Folks still, I read an article just a couple days ago that GameStop was completely out of Nintendo Switches because they were like, soon as they got them in stock, people came in and just bought them up due to, again, most likely the increase of gaming and the overall increase of people at home. If people are going to just want to play video games or entertain themselves some other way, because I'm pretty sure all the shows on Netflix they've watched 3 times, and all the content's gone there, but they need to find another avenue to be able to entertain themselves, and gaming is a great way to do that. And there's just endless possibilities with that for sure. So that being said, so again, we're going to be looking at this overall analysis of this. So what we're going to be jumping into is the charts. We're going to be jumping into Tastyworks to kind of give you the full options breakdown. It's a very simple options play because he's just doing a straight YOLO play, but we can go ahead and look at it. So we have GameStop stock currently pulled up here. As you can see, this has been underperforming the 200 exponential moving average here on the daily chart. It has tried to popped off here a couple times. That was due to a lot of good data, due to the fact that we just talked about. Same store sales in some regions were actually up, and the curbside stuff was doing very well. And they're kind of just literally trying to trim the fat, just closing out stores that are underperforming again, and just trying to run the business as a profitable business. That being said, it has had its ups and downs, mostly a lot of downs. You can see here again under the 200 substantially. We are getting down to the $4. Basically, we closed on Friday, potentially having an earnings coming out. Well, not potentially, we are having earnings coming out the 9th, which is basically a week and a half away from today. Again, we're recording this on a Sunday. Looking for a potential jump higher. I think a lot of people, we don't know what's going to happen. Again, no crystal ball. We can't predict things like that. Looking at more of like a weekly side of chart thing, this kind of just sums everything up. Again, this is a weekly chart, but it goes back until 2003. All right, so the stock was kind of peter-pattering around, but then due to the economic boom and gaming and all that fun stuff, it hit a high of $63.77. Ever since then, in the financial crisis, even though a lot of people lost their money, lost jobs, still kind of petered around, bottomed in like 09 temporarily, Traded sideways well below the 200 exponential moving average for multiple years. Then once the bull market somewhat came back in 2011, 2012, you see a huge rise up again, not making the full top of $63, coming down to like 57, 58. And then since then has this kind of been trading sideways, and then now since the 2016 basically just down. This is a pretty well looking understanding of what's happening. You can just literally see this whole downtrend just continue going down. And you, again, if you watch the channel more than 5 minutes, you know that the 21 exponential moving average we use a lot for resistance and support. This is going to be a pretty this is why the yellow line is so thick, is that it's very important to the technical analysis that I use here, that we continuously seeing it following the 21 down. Kind of, I wouldn't call this a base yet. Again, never want any company to fail, but this is not, this pattern right here is not a good sign. We could potentially kind of trade sideways here for literally years until another shoe drops, meaning they somehow the gaming industry just kind of switches and there's no longer needed. The game companies can just do all the various things, and people just don't want to go in the store anymore. I don't know. I can't predict the future. Again, no crystal ball here. That being said, we can continue seeing some consolidation, lack of a better words. This would be a very risky bet on this guy's part. Again, he's risking $20,000, but the only thing that's somewhat intelligent is that he's putting it all the way out in October. So he's he's a little bit far off in the sense of what his predictions is, where the options is, again, giving himself plenty of time to be wrong or right. That being said, we can go ahead and look at the trade tab here. So the earnings, they said, what was the earnings? The earnings were on the 9th or 8th? The 9th. So we're gonna have to look at the 12th. So they're playing plus or minus $1.15. So again, it's only a $4 stock. So we're saying that it could go up. It was at $4, so it could be basically go to, let's just call it $5.20. We do that here, and then the potential low on that. Let's actually bring this back to a daily chart, and then it would be two-ish. So this be going to be pretty back to its potential low here. So we're going to just we're going to draw a nice little box here to kind of give a better understanding of what we can be looking at here. We can just do it like this. So that is its potential 68th percentile move. That's what the market makers are saying. Anything out of these moves, it's going to be the going into the first and second deviation from that price target. Again, that's from the 12th, not the overall earnings. So that's why I kind of put the box further down the line. That being said as well, we can look at this Tastyworks. This is actually what I use for trading options. Wonderful tool. And you can kind of see here, I got GameStop stock up here. It kind of tells me it's hard to borrow, meaning there's a lot of people short currently. So that being said, that could be an indicator of a potential short time pop higher. So it could run up a little bit. And then of course I went to the trade tab. We went to October 16th. We looked at the, what was it? The 8th was the 8 actually, not the 6th. So this is basically the $8 call here. You see there's quite an open interest. There was only one trade on Friday there. Again, this is not going to be a heavily volatile stock in the sense of a lot of options actions in October, because again, it's 138 days out. And again, the move is plus or minus $2.3. So that's not really much where we're looking at, but the IV is super high. The implied volatility is really high due to the fact that earnings is coming out in less than 2 weeks. It's going to be adding a lot of volatility to the overall markets. That being said, again, we can see down here the probability of profit is 10%. So the probability of this being in the money is 10%, fairly low. Of course, the max profit is infinite because the stock can go to $1 million a share. Is it likely? No, not at all. Max loss is what we're putting down, or what the individual is putting down for the potential bet. Again, it's around $20,000. We kind of adjusted the price. I think he paid 39-ish, so we can do 39 and get that proper number, which he paid 620. So I'm not sure how. There we go. So this is basically, this looks like a bunch of crisscrossing lines and looks like a potential rocket launch, but it's not. It is basically how the options markets work. So you can kind of see here, this is where the $8 call is, and then you can see all the way over here where the current price of the stock is. So for him to be profitable, the stock has to literally double in the next 130 some odd days and then be in the money with his call, because this lovely theta guy up here, this little red line, that's going to be the one that's going to start killing his overall price. Even though, let's say, this is again May 31st here, looking at the $4, and let's say if it jumps up to $5, his potential profit on that trade could be potentially higher. Again, this is just theoretical pricing. His current value could jump up nearly $10,000, but the probability of profit at expiration is going to be lower because that theta is going to start kicking in. So even if he gets a nice pop with earnings coming out in about 2 weeks, he could be making a pretty substantial bet. Again, this is just so far out there, and you can see this little dotted teal line that's going from up to down. That's the standard deviation channel. So we can go back to the table here, which you can also see here right below it. This is the standard deviation, so this is not even within the market maker's perspective yet, unless it starts moving up. Again, the stock has to move up substantially in this very short period of time to be able to make him profitable. Again, if it moves and he just does a quick trade, so if he times it right, he can definitely get out at a pretty reasonable price. And looking at the overall curve again, it just it's a heck of a bet for sure. We can see that it's just so far away, and with the probability of being so low, again, we can look at the table here, and I can show you the delta. It's actually saying 25, but with the pop is a different formula, and then the P50 is also another formula, which I don't quite understand the P50 yet. But the delta on this is about 25%. So even though it's 138 days out, there's still a 10 to 25% tile bet of this being in the money. Again, things could happen for sure. Like they could be making a resurgence. This guy could be betting on a lot of people pre-ordering the PlayStation and Xbox for 2020 or for the holiday season this year. I'm not sure. He might know something that we don't know. Like he knows that something is going to come out and pop. That being said, it's a very risky bet without a doubt, and we'll be looking at it substantially more in the sense of this kind of going forth. We're going to be potentially doing update video on this, potentially even with the earnings coming out here, and again, very short period of time. You can see here, even with the 200-day kind of lagging here, this could be the overall resistance to the upside, looking at the potential kind of petering this out, because you can see here, if I just go to the daily 5-year chart, you can kind of see here the 200 exponential moving average has stopped this move quite a bit multiple times, and it just kind of pops above it a little bit, and this kind of fails back down, not getting the proper momentum and the strength to kind of bust out and just continue staying afloat above it. That being said, be very careful out there trading options, particularly guys. Definitely be mindful of the theta within these options. Again, the only positive side to this trade is that he's giving himself time. He is making a substantial bet. I don't know his portfolio size, that he's sounding like he's putting it's a YOLO trade, so he's putting everything on the line that he has in his account. Just be very cautious of this. We're definitely going to be checking back in once the earnings comes out and sees what happens. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.